That's wild. Well, and let's touch on why it's important. So all of us only have so much time in the day.
Understood.
And why should I take my time away from earning money to focus a little bit of that time on saving taxes?
So, excuse me, it's really just a math problem. So we all know about if I put $1 in the bank and I buy a CD and it earns 4%, and I just keep doing that interest rate compounds and I have more money. Now, we would never recommend that somebody put money in a CD at 4%, but if I put it in my investment account, let's say it earns 10%. So there, the famous rule of seven would operate, right? If I earn 10% for 7 years in a row, I double my money. So if you just think about that in the context of taxes, let's say if I do nothing, I pay 40% in taxes. I do some of these neat strategies that I've just described, and I pay 20% in taxes. That's money that I can put to work somewhere else in my business, in an investment portfolio, in a piece of real estate, which is then going to compound, at that rate. So I love when I do a presentation, a formal presentation about taxes, the cover page says, the second best way to get rich in America. The first one is start a business, grow it to significance, generate a ton of income, sell it, whatever you want to do with it. The second one is paying less in taxes because that's more money you can put into the first one. And we have a slide that kind of shows how the compounding works. So it's just the math of it is tremendously powerful. And I think it's particularly powerful with entrepreneurs because I use silly examples like compounding at 4%, compounding at
Right.
10%. If you have a really successful business, I mean, that compounding might be 20%, 30%, whatever the nature of your business is. And, whether that's not a political thing, but I think either from a control standpoint, most entrepreneurs think I can probably put my work, I'd rather try to put my money to work in something I'm running and controlling than give it to somebody else, right? And that could be a money manager or the US government or whatever, but most entrepreneurs like that control feature. So it's just super powerful, the math of it. And
Yeah.
people only have to see it like for 1 year and they tend to become, in a good sense, addicted to it's another form of saving. Uh,
Well, and if I think about it from the perspective of like marginal tax rate and
yeah.
and potentially payroll tax, assuming it's still under the cap.
Yeah, a lot of the work we do is all driven by driving people who are starting in the highest tax bracket, 37% federal. Oh my God, if they live in California and New York, those numbers are 45 to 50%, getting them down to like 20% or something like that. So that's part of the math is that whatever you're left over with, it's taxed at a much lower marginal rate, which is good.
Right. And and so if we just take that math going from 30% to 20%, if I'm doing my math right, that's like 17%
Correct.
return.
Right.
Well, if you can pick a stock or a fund that's delivering 17% return a year, you're a genius. You're
Well, and we do this math all the time. So I was on a